bangers. DJ could be back. What's up, Chad? Say hi to mom. You're on TV. Yo. How you doing, guys? Got some interesting stuff to talk about. I actually forgot about it this morning. Let me lower the volume of the music. There we go. But yeah, I got some interesting stuff to talk about. Kind of like forgot about it this morning. I wanted to cover it, and actually in hindsight, when I was editing the video, I was like, wait, did I talk about it or did I not talk about it? And then I checked the video and I didn't. And it has to do with this. I completely forgot to talk about the WXY, even though it's on my chart. So I'm going to talk about that today, which is also something that has to do with the thumbnail of today's live stream. How Bitcoin can wreck the most amount of people. Now, on the channel here, we quite often love to talk about psychology. And we have psychology scenarios that we think of that would bait most people into either longing or shorting, but then eventually get wrecked. And that is going to be the main theme of this live stream. Because, of course, Bitcoin loves to do that. So besides the scenarios that we have from an Elliott wave point of view, as that is the main topic of the channel, we will talk about also how some of these particular scenarios would be great from an psychology point of view. And we have spoken about psychology, as mentioned many times in the past. And it's just a really great, especially in confluence with Elliott waves, it's just a really great way to think out of the box. Now, I haven't prepared actually the video, but if you would go to videos from this part of the chart over here, right? Or even earlier when price was moving to the upside. So if you go to the first few weeks of May, you will see I was talking about a psychology scenario where we would move up to the 786, 886 area, preferably, and then move down to take the lows. That was purely psychology. Of course, we had a scenario which was an ABC zigzag, but from a psychology point of view, it was very attractive because you bait out the people thinking all-time highs, and then you wrecked all the stop losses moving down. Now, throughout time, we had a couple of more, of course, right? We had to move to the downside here, baiting everyone that thought 1, 2, 3 or ABC, which was one of the scenarios we at the time had on the chart as well. But it's very, very interesting, besides, of course, scenarios taking the low. But it's very interesting to at least consider such scenarios so that you are prepared, right? Because preparation, in the end, is what's a key to success, as the typical cliche quote is, I suppose, right? Preparation is the key to success. And that is exactly why we want to think about certain psychology scenarios that bait most people. Make sure that most of the people get wrecked so that we can trade it efficiently. So how are you doing, everyone? Good to have you here. In this live stream, of course, we start with saying hi, but then we move into the analysis. So it's going to be Elliott waves on the daily and the 4-hour time frame. And then we are going to zoom in on the 1 hour 15 as well, because there's currently two things I'm looking for locally with the most recent move towards the downside. So I will explain what I'm looking for. And I will also explain what I am looking for with regards to signs of strength or continuous signs of weakness, which has to do with one of the psychology scenarios I actually like to talk about. So yeah, that's going to be cool. And then afterwards we have chat and Q&A, a live stream planning to be about like an hour, hour 15. As commonly. And another thing that I like to propose, it's not yet put into action, but at least propose, is to start the live streams every day or at least have a set time for the live streams every day at 2:30 p.m. Central European time, which is an hour and 10 minutes ago. So usually when there is news, it's at 2:30 or 4 p.m. in my time zone, right? So you can see here 4 p.m., 4 p.m., 4 p.m., 2:30, 2:30, ta 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 ta, like, and then you have a couple of 8 p.m.s, but that could be an evening live stream, or now the afternoon live stream. If I started at 2:30 p.m., we always are going to be able to catch this news. But also if I start at 2:30 p.m., we can stream for 1.5 hours and still catch the 4 p.m. news as well. So it basically covers any news in the future if I just go live every day at 2:30 p.m. whenever I can. Now, of course, if I can't at 2:30 p.m. for whatever reason, I will have to inform people. But what I can do is after this live stream, I can prepare the live stream for tomorrow. And I can put it on planned, like a planned live stream. So I can put it in the YouTube agenda. And then what you will see in your YouTube timeline is you will scroll through the timeline. You're trying to watch a video of some sort. And then you will see my live stream pop up. And it says planned for this date and this time, right? And then you can I don't know, I think you can put a notification on for it or whatever. I think it makes sure that there's more consistency with the live streams, and people it's again expectation. So everyone knows, okay, it's 2:30 p.m. Central European time. This guy's going to be online. So that's something that's on my schedule to systematize the live stream to a certain day, time during the day, which hopefully helps everyone to be here, and if they want to be here, ask questions as well. So Odin, Leva, Serga, Ali, welcome. Jeroen, good to have you here, man. Jay, A's winner. What's up? Falsey, Adam, good morning. Madhusanka, good to have you here. Bogdan, what's up, man? I'd love to see Bogdan so active again, trading as well after university. The God hath happened. Hey, mate, how are things going? Very well. Thank you, Giannis. Very, very well. And now, my agenda opens up also because the family of my wife now, currently at the airport, is going to fly back to South Africa. So this morning they were still here. But now, of course, as they are gone, it gives me more time to do stuff. And then later this month, a friend will visit, and some family will visit. But that's more like one-day stuff. They're not they just pop in here and we do something during the day and then they're out. This was multiple days and going to Monza. But yeah, it was good. I'm good. Carl, welcome. Harut, good to have you here. Before America does something ridiculous. Yeah, 17 minutes. Then we have the new stuff. 54K in spot. I'm wondering if I should sell. Depends on your plan and strategy, right? No one is able to tell you really what to do. But what I think would be good is you need a bit of a plan or a strat. Hey, if price is doing this, I'm out. If price is going to show me this, I stay in. Right? Those type of questions are the ones you want to answer. Florian, welcome. After last night's shift. Corey, man, go to bed, yo. Thanks for popping in and writing a message. Go have a nice sleep. Dayan, welcome. Live stream only TA. Hoshi, is there a reason why you no longer use channels in your analysis? Yes, I use the channel here, but you only want to use, I like to use channels for impulses. Like corrective structures, I preferably just identify by counting. Generally from a channel point of view, those are sideways structures. They tend to stick inside channels. But I like to use channels when I look at impulsive structures. So we had a move down here. That's when I used the base channel, if you remember, the red one, right? But the moment we broke out of the base channel, your impulse would be finished. And and then I remove it from the chart. So whenever we look for new impulses, it's stuff I'll put on the chart again. Joel's data should be interesting. Yeah, I was wondering if anything is going to happen. I don't know what it is, but it's on the agenda. So I'm quite curious if we can expect any volatility. Bina, Crypto Ser, what's up, guys? Joe Fulker, good to have you here. Typo in the title. Oops. Wait, this is how Bitcoin can wreck most people. Don't be one. You mean the stream title? This is can wreck most people. Don't be one. Oh, one of one of them, yo. Don't be one of them. You know, actually, it was actually a tactic. Shh. I put in a typo for engagement purposes. Right? Like it was on purpose. First time I ever did that. It worked. One of my mods saw it. Okay. Anyway, it's corrected. Right, it's corrected. It's good to know in the morning when you plan to come live. Yeah, I guess it's also easier for you, got like your plan, right? Like as a viewer. What's up, Birabid? How you doing? Yo, Birabid is sharing the content in Bitcoin TA Discord channel. Like this guy, I like he can write his own book. You know, like it's impressive. Check out if you're in Discord. Check Bitcoin TA and check the posts of Birabid. At the beginning, it might be a lot of abracadabra, but you know, check it out. Samith, welcome. Hey Hoshi, you know, I never talk about where I put my investments and stuff, eh? Solid Fab, Sam, good to have you here. Welcome to, cheers, Solid Fab, very, very kind of you. Samsung United, what's up? Okay, let's start. This looks like an ending 5 impulse. Yeah, we'll see. I'm gonna start counting. Charbel, Matt Eagle, what's up, guys? How much percentage of wallet do you like to risk on a trade? 1%. My extreme is 3. I don't like to go above 3%, but I actually always risk 1%. There's not really a reason for me to go above or below that. Do you use liquidation heat maps? I don't. Yes, I actually should. I should make a video about the base channel, trend channel, and the ending channel. Okay, finally, we're going to start the analysis. But first, if you see me drink out of this green bottle, it's no alcohol, right? It's like a cider. It's 0.0. And it's just, I don't know what YouTube's terms and conditions are, but this is absolute 0.0 on the alcohol. Because we do not promote that type of stuff, right? So just so you know. Okay. Minimum risk. Risk to reward ratio. Minimum risk to reward ratio. A 1 to 2 would be minimum. You know, you at least want to double. Else it's not worth my time nor my investment to enter a position, right? To do the risk. Okay. Let's start. Let's start with the Elliott wave analysis with a special focus on some of the psychology of some of the scenarios. Now, I will go through these folders, right? If you've seen the morning update, you'll know what's in here. But again, I'll talk a bit more about psychology. I will also cover the WXY and the 15-minute time frame. So, first of all, let's start with what I guess is most obvious in counting terms, which is some sort of a finish structure. ABC is on my chart. 5 wave A, leading diagonal, 1, 2, 3, 4, 5, right? 3 wave B, 5 wave C, right? Now, if this is true, and we have a finish structure, and we look for upside, we want to see impulsive structures. Now, people that don't know about Elliott waves per se might, of course, look at, okay, we have a solid move up here and a correction, right? And then they see another move towards the upside. 100K next, right? That's what you read at the top, of course. Now, from an Elliott wave point of view, we know that this move up here looks very 3-wavy on a 4-hour time frame, no? It's not great, not great. No, then we got our second leg up, difficult to count as an impulse. Not great, right? Now, after a wave C, there's 3 structures you need to look for. An impulse, 1, 2, 3, 4, 5, diagonal, double 1, 2. Now, a diagonal, double 1, 2 is invalidated. The only diagonal that is left really would be 1, 2, 3, 4, 5. I said it in the morning. Doesn't make any sense to think about this yet. I got a question, I think, from Personal Freedom. Particles of Time is his YouTube username. I'm not sure if he's here. And he asked, is it possible to detect a diagonal at an earlier stage than waiting for a wave 4 to finish? And the answer is no. And the reason is that if you move towards the upside in a 3-wave structure here, your first scenario at that moment in time is going to be a WXY. And of course you can even put a W here, it doesn't even matter. But you're first going to think about a 3-wave structure only if you get a finished 4 in a 3-wave instead of an impulse down, right? This is where, okay, now we can really start thinking about potentially diagonals, right? But the moment you get a 3-wave up, the first thing is going to be, is it an ABC? Is it a WXY, right? Is it any type of corrective structure which has higher probabilities than thinking about a diagonal? Only when you get a 3-wave 4 does a diagonal start to be a higher probability. But yeah, multi 1 2 1 2 1 2 invalidated, took the low. Local diagonal 1 2 3 4 5 invalidated, took this low, which leaves this. Now there's something interesting here, right? So from a psychology point of view, because a wave 1 2 is low probabilities. The blue count on my chart is low probabilities. Wave 1 has to be a 5-wave structure. Probabilities here are not really too great for a 5-waver. There's a slim chance to count it as a 5-wave, 1 2 3 4 5, but it's very much looking like a 3-waver. And then we have 3-wave A, 3-wave B, looking for a 5-wave C, which then has to be a wave 1, 2, we need a 3, we need a 4, and we need a 5, right? And then finish your C. Now wave 2 is 7 times longer in time compared to 1, right? So you can see this range is very long compared to the move up. Now that by itself also lowers the probabilities for a wave 2 significantly. However, what is interesting is the yellow X. So I didn't talk about it this morning. When we look at a structure this long in time, the probability is higher if we do look for another move up. Probabilities are higher. It is corrective in an ABC or a WXY compared to this being a 1 2 3, because the common time target for 2 is the 382 to like a 2 fib time or a 3 fib time, not a 7 fib time, right? However, a wave X or a wave B can be long, right? It's still not like, oh, awesome probabilities, right? Like wave X is 7 times longer than W, right? Like, oh, that's easy. That's a trade by itself, right? Long we go. No, absolutely not. No. But if we look for a move up, probabilities are much higher to look for a Y. Now, the reason this is interesting from an Elliott wave and a psychology point of view is because of the potential of another fake out. Before moving down below 49, we first move up above 65 to make everyone bullish again. Now, if we do move up, we want to do that before touching preferably 53.1 here for a double zigzag, ABC, correction, ABC, right? Of course, there's always the potential of putting a W over here and then have a short X, but count's not as nice. So, but then look for a Y to the upside. Because, of course, we have a move to the downside. We took out this low. Crypto Twitter and whatever is bearish, right? Okay, right? We understand the probabilities from an Elliott wave point of view. Yeah, they're not too positive for the bulls at the moment. But how about a fake out before the drop? Make everyone bullish once again. Where have we seen this before? Drop, almost took the high, right? Drop again. Almost took the high, created a lower high. Drop again, almost took the high. Drop again, did not almost take the high. We got up. It was quite nice, quite far. I mean, we got to like the between golden pocket 786 area. Not bad, not bad. But just imagine the swing of emotion when everyone talks about, oh, you know, 45K and bull market is finished and ta. And if you can move down, preferably still moving down locally, or one more move up and then down to create a flat here, ABC, and then move down. But hit some support, right? I'll explain what I'll be looking for at support if I want to see a move up for Y. But how about getting that move, preferably a 3-wave structure in a zigzag, which means it's a 5-wave impulse, 3-wave correction, and another 5-wave impulse. However, this is then a wave C of a bigger wave Y. And a wave C tends to have a high amount of volume, which is nice because it mimics a wave 3. It baits people into a wave 3 and 100K and all-time high and 80K and whatever, 500K. But then instead of getting that continuation, we once again create a lower high. And then once again, we do this. We do this, right? We do this to get below 49K. So one more fake out push, just to make sure that everyone that is shorting here gets stopped before the real move happens. And then of course here they're longing and then they get wrecked again. So it's like double wreck. Now for that to happen, we of course need some signs of strength, which at the moment are not visible on the chart. But I will explain what I am looking for. So if we go to the lower time frame, first of all, I will analyze this part in a second. The only thing I want to show you is the support areas here. So you can see I have two blue boxes. Right, I have a blue box here at 54.6, 55.2, and then another one here at 52.3 to 53K. What I like to see here, if I'm looking for a Y up, because at the moment I'm not, let that be clear, right? At the moment we are in a local downtrend, right? Probabilities are higher. This is a wave A or 1, and we look for a B or 2 and another C or 3, right? Where B or 2 is finished here, or we have a bigger A, B, C, or a WXY, W, zigzag, X, and then wave Y being a flat, and then go down for C or 3, right? So I know what I'm looking for. That's currently your highest probability. In other words, probabilities remain higher to still take this low at some stage, either directly or indirectly. However, by all means, what I'm interested in is observing price action in this area. What I would like to see is price holding support, first of all, because if we are very bearish and this is a wave 1 and then a 2 and then maybe another 1, 2 and then we get a 3, we just want price to really, you know, dump to the downside, high volume, not clear signs of strength. What I would like to see is price hit support, one of the blue boxes, see price action, market structure change, right? We have clearly bearish market structure. Basically, what we saw here is what I want to see here. And just like we had bearish CVDs here, I want to see bullish CVDs here, as price is creating that market structure, right? You need to get confidence based on your tools, based on your whatever you like to use, indicators, order flow, right? Something I like to see is Elliott wave structures, an impulse, a diagonal, a multi 1-2. I like to see some CVD diffs, you know, to see some levels flipped, resistance into support, and then it gets interesting to look for that Y. The problem, however, for the bulls is that a WXY is bearish, because after Y, you still look for price to move down, which would be, of course, hilarious because it wrecks many people. And in the end, that's what the market does. So we have our the psychology scenario here would be a WXY. From a psychology point of view, that would be, I'd be digging it. And we do have bullish CVDs on the 4-hour, by the way. If I go to the 4-hour and I zoom out, so zoom out. So we do have bullish CVD, right, on a 4-hour time frame. The problem is, like with 4-hour CVD, as nice as it is to know about, hey, we have 4-hour CVD, what you really want to see is 15-minute CVD divergences as price then moves towards the upside, as just explained, right? So the 4-hour CVD only starts to become relevant if you can change local market structure with local 15-min bullish CVD. Else it's not really too relevant, because if you move down continuously with bearish CVD divergences on a 15-minute time frame, you go down. Right? The probabilities are much higher to continue to the downside if locally on a 15-min you continue this market structure with bearish CVDs. You want to see it switch. Yeah? But it's good to know about. It's good to know about, especially with the potential of a WXY and then move down below 49. Right? So you wreck all the longs. Right? You move up here. Then you grab all of the liquidity from the shorts, and then you go down, and then all the longs here in the peak. Boom. Interesting. Interesting. So just to summarize, look, the easiest B, A, B, C. Right, that's a very easy scenario, three-wave structure. Wave A is a leading diagonal. Wave B is a running flat. And then you have a finish C, and then voila, done, finished. The problem, however, for the bulls is that the move of this low currently has a low probability of being any of the three bullish structures. For an impulse, we wanted to see 1, 2, 3, 4, 5. Well, we didn't get it, which means the alternative is 1, 2, 3, 4, 5. But your wave 2 is 7 times longer than your wave 1, which lowers the probabilities. A double 1, 2 is invalidated because we took the low. And a diagonal 1, 2, 3, 4, 5 is invalidated because we took the low. The only diagonal left would be 1, 2, 3, 4, 5. It's too early to talk about this big diagonal. Need to wait for 4 to be in. So the alternative for the bulls would be a WXY. But the problem for the bulls here is that a triangle in a wave Y is not that common. So here what you're looking at is a WX and then a triangle in Y. Now wave Y in a sideways, double combo, sideways WXY, while the news hit, by the way, so make sure you trade safe. 4 p.m. Jolt's job opening. Right? No idea what it means. I'm not really a fundamental person, but hey, might increase some volatility, so make sure you trade safe. But WXY, wave Y, commonly in a sideways structure is either a zigzag or a flat, right? And then comes the triangle. But in this case, we would have to look for a triangle if we don't want price to go below this low, right? So we're looking for the bulls for scenarios that don't break the low. But as explained, the probabilities for an ABC at the moment are low for this. So we can hold this low, but then the WXY would be your kind of like go-to scenario, but then you have a triangle in Y. And even for a triangle, it's very early to talk about triangles, because also with a triangle, preferably you wait for the fourth wave to be in, which is called wave D. All right? For the triangle, you use the letters A, B, C, D, E. All of the waves have to be three-wave structures, zigzag family structures. And we are then working on a wave C. Invalidations are clear, right? And then you want D, E continuation. Now the similarity between the triangle and the WXY, right? WXY and the triangle is that after in a triangle a wave C and in a WXYX, you want price to move up. In D, however, you go back down before touching the high here. And if we look for a wave Y, we take the high. That's the main difference between the two, but the price action other than that is relatively similar. But then again, probabilities, well, we definitely need more price action to be bullish. Let's be honest. It's not looking too great for the bulls, and that's also why the probabilities are high for the bears. Even if you move up for the WXY to 67, 68, at the moment it's the for probabilities to switch bullish, you either need the most impressive wave 3 to the upside here, with this being a 2 that's 7 times longer, which of course is low probabilities, or you need that diagonal, but then we still need a lot of price action. Many days, if not weeks, of price action before we can really switch probabilities. Now, in a triangle, you're looking for a wave C, which should be a 3-wave structure. So if we then zoom into the 4-hour time frame, right? You're looking for an A, B, C. Either your B is finished or one more leg up. I'll explain why in a second, but you have then a 5-wave A, 3-wave B, 5C. If we are looking for a 5-wave C, we then have a 1, 2, 1, 2, 3, 4, 5, 4, 5. That's what you're looking for on the 1 hour time frame, to be more precise. 1, 2, 1, 2, 3, 4, 5, 4, 5. That would get you to the target area currently for C between 54 and 52.6. Alternatively, if we do see some sign of strength here, which also 1, 2, 1, 2, 3, 4, 5, which also starts with hitting the 618. So if price can move up and hit 57.2k, right, that would be at least a small sign of strength to think about price moving up to finish B higher. Now, what is then the scenario, right? This zigzag in W, complex in X, flat structure in Y, A, B, C. We're then looking for an impulse 5-wave structure to the upside to take the high at 60k, right? Finish Y or B, maybe even hit the resistance at 61.5, who knows? Not the highest probability at the moment. Why? We didn't hit the 618, right? We're just ranging sideways. The most recent move to the downside here on a 15-minute time frame, maybe even on the 30, also on the 30, was on the highest amount of volume. So we're moving down on increased amount of volume. We didn't yet touch the 618 to invalidate a wave 4. So unless that happens, arguably probability is higher to move down, take the lows directly. And if you do hit the 618 here, oh well, we can start looking for signs of strength for continuation up. Take out the high, look for a wave Y, B higher, and then still look for a move down, because after B, we still look for C. No, we still look for that C to the downside. But the target for your C will slightly change if you do get another leg up. Cool. Okay. And this then finally leads me to the bearish scenarios, or quote-unquote bearish, where the one-on-one on the one... Oh, wait. Let me quickly answer that question while I see it. These are two one-on-ones. The reason I have two is because I took them from the high to the low of A to this high and to this high. And that creates an area. I always like areas. I don't like single levels. So that's how I do it. So the first two clicks is the same. Click 1, click 2, click 3, click 3. So it's two different volume, like two different trend-based fib extension pools. Okay. That creates the area. If B, however, moves up here, right, then of course this becomes a pivot and this one will be removed. And if we move above this one, then I only take this to then a future there, right? And then I toggle on the 1 and the 1.236 in that case. Good question, actually. So, scenarios where we do take the low. Now, of course, naturally, the bulls are running out of options from an Elliott wave point of view, right? Impulse 1, 2, 3, low probabilities, 2 is long, multi 1, 2, diagonal invalidated. Only a bigger diagonal is an option, but it's too early to call. And we have a triangle for the bulls, but also actually early to call. So we need more information to switch probabilities to bullish, which is a matter of time. At the moment, probabilities are higher for the bears. Now, in this case, what you're looking for is a WXY with a zigzag in Y. B is either in or inside B. Remember, we look for W, X, Y would be hilarious, and then move down for your bigger wave C. Now this scenario, I mean, it remains a bit of an awkward scenario because for your wave Y, right, your blue wave Y is incredibly deep. It's a very, very big wave Y in price, right? And Actually, preferably for your wave. So let me pull the target for Y so you guys know what I mean. I take a trend-based fib from the start to the end of W to the end of X, right? Toggle on the wave Y here. This is your target, right? So minimum is 0.618, common 1.236, 1.618 is uncommon. You can see the target area for C is below. Common target for C is the 1 to the 1.236, taken from the start to the end of A to the end of B. Current high of B, 65K. Now you can clearly see this target area is below the 1.618. Minimum target for wave C is the 0.618, but the 0.618, right, is not that's a rare target for C, which is all the way up here. You do want to take the low of A, right, as a minimum, but yeah, you would then be between the 618 and the 1-to-1, but that's still a rare area for C, right? If you get close to the 1-to-1, okay, acceptable, but currently you're still below the 1.618. No? So actually for this scenario, it would be quite nice, not gonna lie, to have a higher B, and then have your W, X, Y have a higher B, which then means the target goes up, right? And if price would go up, let's check my resistance here. So we have, what's this here? Daily range value area high. If we would move to the range value area high here at 68.3, right, creating another lower high, your target is between 47.3 and 42.4K, which includes both of the support areas I have here as well. Below this low, there's not much support. If you take this low, then probabilities are high, you're moving to the mid 40s. Yeah. So, and if you do then move up just that little bit, and we take again trend-based fib from right, for your wave Y, then now you can see, okay, we at least have confluence between C and the 1.618, right? That's at least the minimum we can ask for. So from a psychology point of view, but also theoretically, it would be nice, right, to see that happen. Let me press Ctrl Z for a little. Okay, there we go. But by all means, you still take the low. And then the story repeats, no? You got to find strength here. Wait for, depends on your plan or strategy. Everyone should have their plan or strategy. But in my case, wait for structures from an Elliott wave point of view. Diagonal, multi-1-2, impulse, right? Wait for the retracement. Keep an eye on CVD. Flip structures, right? Flip some of the boxes. Support resistance. Right? Interesting. Your most bearish scenario is pretty much the end of the bull market. Does not have the highest probabilities. Probabilities at the moment are higher that this is corrective, not impulsive. But we have to be aware that if you do take this low, you can go potentially a lot lower, which is a lot lower than what I show here. The 1.618 would be a minimum target, but then you only finish a 3. And then you still need a 4 and a 5, meaning 3, 4, 5. So anyway, a lot lower. Well, what lowest probabilities is that the price action inside 2 hit the 886, taken from the start to the end of 1. I just want to show it. Again, preparation is important. It just doesn't have the highest probability. Now in both your impulse down for a wave 3, as well as looking for a wave Y down and then A, B, C. If the high of your B is in, you would be looking for an impulse to the downside, no? Now, if we count this as an impulse down, which has a highest probability, either labeled as an A or a 1, right? A is bullish, 1 is bearish. A, B, C, back up. 1, 2, 3, continuation down. Oh, that's a difference. Then ending 2 here, we look for a 3 down. Now, in that case, of course, potentially another 1, 2 before big 3. If we take out this high, this is the same as your B. If you do take out the high of 2, we're going to do this. W, X, flatten Y, right? You finish Y, you finish 2, right? Invalidation is clear, and you then still look for price to move down to take out this low. Now, it's a lot of chatting, a lot of like, oh yeah, okay, so we can basically go up or we can go down. Yeah, I see it coming. But just to summarize the probabilities, here you go. Daily, at the moment, higher probability is bearish. We're looking for an impulse down, or we look for a WXY, as explained. Bullish scenarios currently are on the number 2 position. We need more time. 4-hour time frame, or arguably even the 1-hour, probabilities are higher to take out this low, either directly or indirectly. I don't care, right? You need your own trading plan and your own strategy to trade whatever the chart is going to give you. And I will go over the 50-minute time frame now. But that is your highest probability, right? So it creates a directional bias, and a directional bias is something that can be taken into account when trading. And that is also how I like to use Elliott waves myself, right? I use it as a directional bias. Also for trading, mainly swings though. So 50-minute time frame. Currently 2 things I'm looking for here locally. Shortly covered it, but if we are most bearish, let me put this on the chart at least, and we have a finished B. So now I will put both of the scenarios on. What we are then looking for here is a 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay, there we go. We are looking for this. And I can even be more precise. And I have 1, 2, 3, 4, and 5. Gotta make this another color now though. Pink. There we go. So in this case, we then have a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now this count would be supported on the lower time frame, 15-minute, 30-minute, with the highest volume being in the last move down, which is something you like to see in a wave 3. Invalidation for your purple wave 4 is 57.2. Hit 57.2K. The purple wave 4 is invalidated, right? Which increases the probabilities of corrective structures. Or alternatively, a 1, 2, 3, 4, 5 finished impulse. However, that is lower probability because wave 5 is the extended wave and has the highest volume, which is not common, right? Most common is that wave 3 has the highest volume and is the longest. So therefore, a 1, 2, 1, 2, 3, 4, 5, 4, 5 is the highest probability impulse to the downside. And if you hit the 0.618, the probabilities would be higher to count it as a 3-wave structure compared to an impulse. Not a 1, 2, 3, 4, 5, but preferably a double zigzag WXY. Now let me put this on the chart as well. So then we have this, and then we have up. And then we have our WXY. I actually need to go up. Make this yellow. Make this blue. Oh, never mind. Make it green. That's fine. Okay, and then we have A, B, C. Boom. Boom. Do this. There you go. There you go. There you go. Up. And then I'm not finished yet actually. And then we have our W, X, Y. It's gonna get messy now. B, Y. Okay. Not the highest probability as explained at the moment, right? Probabilities are higher for now to take out this low directly after ranging here. Only if you hit 57.2K do the probabilities change. No? If you hit 55.4K, this scenario is like looking for a C up in a flat A, B, C is pretty much off the cards. Okay. So what you're looking for here is then 1A, 2B, 3C with then an internal WXY, right? WX and then a flat in Y, sideways double combo, 3-wave A, zigzag, WXY, double zigzag, 1, 2, 3, 4, 5, up in your C of Y, of 2 and B. Minimum target, take out the high of A, by the way, at 59.8K. In that case, of course, what we want to see is that. And this is what we need to wait for. Of course, including hitting 57.2. Because that is important. This is your common target area for B, your white B here. So the common target area is hit. The 1.618 is not touched. We got close, but we didn't touch it. So yeah, that is the probabilities locally and these scenarios locally. At the moment, higher probabilities for this. If you hit 57.2, the probabilities slowly switch for this, where we look for price to move above 60. Your alternative is then going to be, if you do take 57.2, probability is higher to look for A, B, C, right? And your alternative is going to be 1, 2, 3, 4, 5 finished, 3-wave correction, not take the high and move down later. But as you can see, the confluence between the different scenarios, as explained in the probabilities, is take out the low one more time. Directional bias. So, yeah, that is that. So, very nice. We spoke a nice bit of the analysis about psychology. I love psychology, man. Like, it's so fun to think about how the market can play its cards from a psychology point of view, like how it has done in this range as well. And I'm very interested. That's a personal opinion. This has nothing to do with technical analysis. I'm very interested in a potential WXY, even though X is very long. Also for X still 7-8 times longer than W is still long. But having a fake out, was this a good fake out? I guess arguably it was pretty decent. I mean, volume wasn't that awesome. We did have some volume increasing here, and of course, if you would go to my thumbnails made of the videos made between the 12th of August and the 22nd of August, you will see like all of my thumbnails in that range were like, we take like 63K, we look for 65K, moving up. Like we got to move up, a little bit of an impulsive structure. We hit the resistance here, the white box that we have, right? We had an order block here, naked point of control, la-di-la. We got a rejection that is just based on the reaction. Right, so first target was hit based on reaction. We moved down, perfect, and now we're here. For the bulls, it currently doesn't look great, and for the bears, it does look great. The bulls need a lot more time and a lot more information to have their probabilities increase on a daily time frame. From a psychology point of view, even if you do move up, probabilities are higher. It's a wave Y, or at least a corrective structure if you take this high here and then look for lows later. But we take it step by step, and at the moment, probabilities 4 hour, 1 hour high to sooner or later take that low, as explained. We know the areas of support. We know what to look for, at least I know what to look for if I look for potential move up. We have bullish CVDs here. These are only relevant if on a 15-minute time frame we can change structure, preferably first hit support, change structure, continuous bullish CVDs, and then look for bullish Elliott wave scenarios on the 15 as well. That's when things start to be interesting. At the moment, there is no sign of strength. We just move down. So yes, Blaster, I agree. It would be great that if you do move up, if you hit the 886, just like we did here, by the way. And I even think we also hit the 886 here. 1 second. Yeah. So we hit it twice. If you hit it here again, then at least we know, okay, this scenario is really low probabilities because it already is low. because of the 886 touch here. It's just not the priority of the bearish out of the bearish scenarios. But if you then also hit the 67.6, that would be great, because then you have clarity. Okay, if we look for a move down, much higher probability it's corrective. So it's a great buying opportunity for bigger swing positions. Yeah. I mean, that would be great. But we have to, we have to be patient. We have to be patient. So for now, we are here just ranging sideways, Bitcoin doing nothing. I think the bearish CVDs played out actually on the 15 now. I need to refresh. 1 second here. I need to refresh. Okay, so on AGGR we didn't take the low. But on my chart, we did. Yeah. So the bearish CVDs here have played out, right? This bullish CVD is not interesting to me unless we start to change market structure and create more bullish CVDs, right? I mean, and hit 67.2. So that's literally what I'm looking for if I would like to switch for moves up. So yeah. If price drops out of the base channel, would it change your weekly count? Yes, because we of course like to see if we're impulsive. So this is going to be a very short channel section. So in an impulse, 1, 2 is usually short and deep, right? And then you get your 3 to the upside, right? So you get an extended 3, which is most common. Then you look for a wave 4. Shallow, long in time, and then eventually you get a 5. Now, what you're looking for, or what T. Clapson is talking about, is the base channel. Now, the base channel taken from the start of an impulse to the low of your 2 to then the high of your 1, because this is what you have, right? 1, 2, 3, 4, 5. Absolute perfection. I'm such a no-lifer. So this is then your impulse. Now, this is exactly what you like to see. 3 moves out of the base channel, as we like to call it. By the way, let me also use the right template, because I made my templates for a reason. There we go. Poof. Bullish base channel. 1, 2, 3 moves out of the channel. Wave 4 comes back to the channel, and then you have 5. Now, wave 4 can move inside the channel. That's no problem. But we don't want to see the channel break. And the wave 4 moving to the lower trend line, in this case, this example of a base channel, is not what we like to see. Right? It's not what we like to see. So the moment you get a wave 4, right, that and then hits the low of the channel, in that case, I would then remove the base channel and the impulse, and we could start looking for, okay, 1, 2, 1, 2. Continuation up, right? A double 1, 2, or a bear scenario, 3-wave structure, and we are looking for a bigger move down. Those are then going to be 2 options. So yeah, let me shortly. I will answer Anon. Let me shortly check the chat above and. We started at like 19 minutes or something. I think officially 19, 18. Make sure to drop them in the middle of analysis. Now chatting and Q&A. Thanks, maybe a Band-Aid. Thanks, man. Maybe a Band-Aid. I'm actually curious. How did you get to your name? Maybe a Band-Aid. Now, my name has a story. Koens. Because my name is Koen, but why the Z? There's a story behind it. There's a reason why. Getting down here in a second. Let's have a. Oh, Steven. Yo, we were in touch on Telegram. I knew you were gonna move up, but you did it during the live stream. There you go. Yo, welcome, man. Welcome. So Steven was in gold, and here you go. Now he's in diamond. Welcome to the top step, man. Welcome to the team in the diamond squad. Make sure to fill in the. Oh wait, Wait, you upgraded membership? Oh, yeah. Okay, I gave you the gold role earlier today, and then we spoke about diamond. Yeah, so you filled in the form, but it would be good to refill in that form. Is that English? Or to fill it in again, just so that from an administrative point of view. Oh, no, never mind. Let me just make you diamond. Let me just write that. He doesn't need to do that. Let me just immediately get you sorted. Okay, there we go. Pots, boom, poof. There you go. Make sure to check diamond, because you just got yourself a lot more channels on the left side. Yeah, welcome to the team, Stephen. Good to see you join. What's up, man? Any more GPs planned? Not at the moment. Not at the moment. We did Zandvoort, Monza. Both are relatively close as well. But yeah, no more Grand Prix in the upcoming time. We've been chatting about Baku, but I just look. I don't want to be gone that much. I like to, I like to work. I love what I do. I love to work. I love to be here, and of course, it's good to be a weekend away, spend time with friends and family, and that's important. That's important. But I don't want to do that every weekend. I also just like either time for myself without all people around, or be here, make content, do the altcoin stream on the Sunday, that sort of stuff. So, have you ever dreamt of counting waves? Probably. I can't remember. I always forget my dreams. If 49k is or Y, does that have to go lower or can finish higher? It can finish above wave Y, Timur, if wave Z is a triangle. Wave Z can be a triangle. How much high probability is a W than a diagonal or a triangle? If you take a pi and it has 100%, then what are the percentage of each option? I never like to talk about exact percentages, but let's just say that a diagonal, which is way too early to call, is going to be 5%. A triangle, which at least is in the running, is about 25%, like 30%, right? Still very low from a percentage point of view. And then you just have taking the low, right? How we take the low, that doesn't matter. You can have WXY, it can be a double 1, 2, other stuff, right? And that's going to be like the other like 60%. If not actually more. I think I even give too much probabilities to a triangle. Triangle, like diagonal is 5%, triangle should be lower. Should be lower, like 15, 20. Like you need to wait for a D, let's say like maybe like 20% more reasonable, 15, 20, and then eventually you still have 70% currently for the bears, if you talk about pies. I do like a good pie. Chester Beat Tester, how you doing? Why is nothing said about signal from 49k low to the 59k high? That will be an area that will appear so obvious after the fact of a, but it's not. No, it's not, because I have two support areas which are in confluence with other things, and the golden pocket might be at that level. But yeah, there's no reason to mention a 618 in particular, right? But it can be part of your analysis. Thank you, Samsung United. I appreciate it, man. What's up, Andrew? John. Is there a price that if we hit today, we can be more sure that price is going to go up before taking the low versus take 57.2k? Bear. Bad news. Pretty much, Florian. It doesn't really make sense to think about the bear scenarios, and the bull scenarios simply have low probabilities unless the bulls are going to prove us differently with more information. But at the moment, they are not doing a great job. Haikuns, can a wave 4 for take out a wave 2 in a diagonal? No. Wave 4 cannot take out the low of a wave 2. That's an invalidation. Wave 4 can be bigger in price than wave 2 in an expanding diagonal, but it can never take the low of wave 2. Japan has 2 bank holiday Mondays in a row. I answered this question earlier, of course. Because I think someone else asked that. Are there 3 separately saved things in one folder that you're toggling in? Yes, I have my object tree here, and in the object tree I then have my scenarios, right? Where's the ABC? Is that this one? Yeah. So I can just toggle all things on and off, right? It keeps the chart very, very clean, very organized, very structured, which is something that I like. Yeah. And just to repeat, the 2 1-to-1s, so explained earlier, but 2 trend-based fib extensions taken from the high to the low on both cases, but then the third click was this high and this high, which then creates an area. I like areas. You know. It's not about a single level. I do like an area. Body language learning, yes. Marcin, welcome. Welcome. Good to have you here. Jay, thanks for your live stream. I have a hard time proving that Elliott wave really works because you can always make a scenario. Did you have this doubt yourself, and how did you solve this? In the beginning, in a way, yes. But I always, first of all, trusted the content, and I trust the data. Let me show you something. If you go to Discord, and you go to the educational section, and then Elliott waves, download these 2. And just read through them. These are 2 PDF files where they've done, I don't know, like what was it, 10 years or even 10 plus years of research on patterns, hundreds if not thousands of traders. It's in the text. I forgot the text to the T, but many traders participated in collecting the data plus automated systems. And it will give you a very good idea of data in Elliott waves, and it absolutely works. I mean, I myself can vouch for it. I mean, I trade Elliott waves as well, and I earn one of my income streams is trading, including purely trading the waves. But what you need, of course, is a certain level of skill before you can actively trade Elliott waves. Now, Elliott waves is probably one of the strategies or the methods in the industry which take a lot of time to learn. Like, there's so much theory, and step 1 is learning everything out of your head, which takes a long time, right? And then you should not forget about all the small little details, and then it's about counting it on a chart. The chart is never perfect, so you need experience with charts that are not perfect compared to books and pictures. And then you need to transition from being able to count to adding probabilities. So we have a scenario A and a scenario B, and based on the rules, the guidelines, the volume, the extension, the retracement, and other stuff, time, you will be able to say this scenario respects Elliott waves and everything that comes with it better than this scenario. So this is the primary and this is the alternative. In Elliott waves, you always trade your primary. If that one fails, you go to your alternative. Your alternative becomes your new primary, and you make a new alternative. And then you continue to trade primary till it fails, and then you go, and that's how things then go. Now, other than that, trading Elliott waves, just like any strategy, includes risk management, right? So yes, you can have an incredible target of like, oh, I'm looking for a 1, a 2, and my TP is going to be all the way here at wave 5, right? You look for 4 and 5. You're like, oh, this is going to be my TP. But maybe, it's an ABC. And yes, you entered here expecting a 2 and then a 3, 4, 5. But what if this is an ABC, right? You hit a common target for C and then you move down. I mean, if you are good in Elliott waves, you should know where probabilities can change, right? You're on the right side of the trade. You got your move towards the upside, but this is an obvious TP area. And also, this area is an area where you want to observe the range, observe signs of weakness, because if you get them, you want to close your trade and move into shorts. Now, I mentioned this here, right? The moment price, you can go to my content, the moment price moved up here and touched the 618 taken from this high to the low, we were talking about prices high probability taking this high here. I've been saying it for 10 days. Yeah, okay, we go down, blah, 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 and then a lot of ranging, We were looking for price to move up. Now, of course, I was in a long. I even shared it in the setups group as well. I was in a long. But also, if you go to the videos here, I was very aware of the potential of a WXY, as well as, of course, impulsive continuation, where we had resistance at 65, first area of resistance, then here 66, 68. Now, what do you think I do at these levels, right? You can see my box here in old videos. That's a TP. Bare minimum, that's a TP. Now, the moment price then shows weakness, right? The idea changes, or not necessarily the idea changes, because I already had a WXY in my chart. But instead of holding on, right, you can TP more or close a trade, and then based on signs here, multi-1-2s, right, and then maybe some bearish diffs or other tools you like to, you go in the short. So yes, you can absolutely trade it. You can also trade Elliott waves in confluence with other tools. Like you can use Elliott waves to create a directional bias, and then you trade your other tools that give you confidence to trade in that direction. So in other words, we hit resistance, for example, and you're thinking about a short, right? You're like, okay, you know, based on my Elliott wave count that I talk for you, right? We had resistance. This looks very 3-wavy. I'm not confident about a 1, 2, and a 3 continuation. I'm looking for weakness. I'm looking for price to move down. Now we move to the upside. Okay, everything perfect. We hit resistance. Now this is your first area of interest to look for downside. But of course, you're like, well, you know, we did push into resistance, you know, volume increasing here. So it's weekend. We had weekend here as well. So you're like, okay, I'll wait. I don't yet have clear signs of weakness. You know, we move up, high volume. It's weekend. We're ranging, like blah blah. But then the next day, price is moving down. Right now, your directional bias is already towards the downside, but maybe you just need your other tools to agree with you. So maybe one of your tools is market structure. You want to see a market structure break, right? Another tool can be CVD divergences. You want to see bearish CVDs building, right? Another tool can be volume. You want to see volume increasing as price moves to the downside. Another tool can be losing the VWAP. Another tool can be losing whatever, right? X, Y, Z. And then you're like, okay, and now I got my directional bias from an Elliott wave point of view in confluence with my other tools. And that gives me the confidence to trade it. And then, of course, you need to know where your TPs are and all that stuff. But, you know, you don't need to solidly trade Elliott waves as purely as it is. You can, but you don't need to. You can also use it for a directional bias to then trade based on your other tools. But does it work? Absolutely. Make sure to check out the statistics as well. Is the 886 scenario affected by how much time has elapsed since it occurred? Not in time, but in price. So if you have, if price comes down, right, and you make a low, and then you move up, and then you move down, you touch the 886. Now, what commonly happens is you get 886 golden pocket down, right? Maybe you hit the 05 and then down. If you do pass the 05, you know, yeah, we could be looking for price to take the high and an A, B, C, or look for a bigger WXY. Those are then the highest probabilities. Now with A, B, C, of course, the target for a wave C, taken from the low to the high to the low, right? Common target area. If price is going to move to the 1.618, that is where the probabilities start to decline for the 886 probabilities to take the low, right? So basically, unless you take or move towards the 1.618, which is a wave 3 target, and it is still a wave C target, but less common, that is where you got to be like, okay, you know, we might actually move, like continue. Now, the last time that I think I have to go to the 1 hour, 57.1, by the way. Let's see, I got to go to the move to the upside. Can I get there? Yes, I can. Here. This is a good example, right? So we had this crazy wick, the intern that pressed the wrong button. Curious what happened. Anyway, you pull the fib from the low to the high. We touch the 886, right? Now, there is a couple of things that I don't really like to go in detail with regards to this 886 pull. You want to pull an 886 from a fresh pivot, and yeah, anyway, for the sake of an example. So 886 touched here, right? 886, golden pocket, 886, golden pocket, 886, golden pocket. Eventually we break the golden pocket. Also, by the way, if you test the 886 twice and you still move up and break structure, that's also an early sign that the 886 might actually hold. By all means though, you do this, right? You start to move above the range. In this case, you could have used a bit of volume as well. Volume starts to increase, right? We know that if the 886 is touched, you're looking for a wave C or Y. Wave C should be a 5-wave impulsive structure. So if this is the end of a wave C, you somehow need to count a 5-wave structure in here. Now, that's not possible, right? It's very 3-wavy. But if this is 3-wavy, we need to think about a Y, which means we need W, X, Y. However, W is not a flat for Y to be a zigzag, right? So therefore, you're like, well, low probabilities, it's a zigzag. So you already start to end volume coming in. So you're already starting to think, okay, we might actually continue. And then, oopsie daisy. And then you move eventually to the 1.618. Volume continues to increase. You start ranging further. More bullish CVDs here are forming, and off the races you go. So, you can use more context, but, that's how you can observe price action after hitting the 886. So it's common, of course, 886, golden pocket, take the low, 886, maybe move above the golden pocket. A great example of an ABC. Let me see if I can find it. So a zigzag. And then still taking out the low. Where was that? 1 second, I'm thinking. ABC. It was ABC and then move down. Where was it? ABC and then move down. It wasn't a downtrend. Where did we get ABC? Oh, here. Oh, here. There we go. 886 touched, right? We move beyond. You can also see here, by the way, 886, golden pocket, back to the 886, back to the golden pocket. We move above the high here. This is this is brilliant, right? A, B, C, and up, down you go, right? So, yeah, very nice. Didn't touch the 1.618. I forgot if this was like 1, 2, 3, 4. No, fine. No, I think it was 1 A, B, C, and then move up, take the high, and then down. But yeah, common target area for C touch. So, play around with the 886 tool, observe what happens as well, right? And you're gonna enjoy it. It's like great for the. It's such a. Oh, there we go. We touched 57 too. But it's so nice for probabilities and directional bias. Also, with that ABC example, wave C, by the way, hit the blue box resistance I had there, and then it moved down on bearish CVD on a 3-minute time frame. That was quite nice. Locally, we now invalidated wave 4. Did I have it here? So wave 4 retraced too high, right? So that means that we do not look for a double 1, 2 here, 1, 2, 1, 2, 3, 4, 5, 4, 5, right? Which means that probabilities increase for the flat A, B, and we look for a wave C, as well as 1, 2, 3, 4, 5, and look for a correction. That one would have lower probabilities though compared to this, looking for a C up, but we have to be aware. So in that case, what you're now looking for is either the flat or you have this. This has, however, lower probabilities because the highest volume is in 5 and wave 5 is extended. Your invalidation, of course, is very clear. And then you're looking for a retracement before continuation. Now the 382 is a minimum target for a wave 2, BX. Preferably though, you would move a little higher into the most common target area, 05786. So in both scenarios, you preferably actually still move up further. And then that, and then this is your higher probability. You look for a flat and then a wave C and Y2B, finish higher. Right, we do have some resistance to the upside still. And then your second here is finish 5, look for a retracement, which has to be a 3-wave structure, preferably still moving into the 05786 area. So in both cases, you preferably look for price to still move up. Yes, and this is also what Elliott wave shows: bearish news at lows and bullish news at highs. Oh, we can also, of course, look at CVD. Does line 135 get in as a how major? Meaning longer 1 means investors get in early. Longer 5, they FOMO in late. Well, so you should Google wave personality. I think that answers your question. Just checking if I have my notebook. I don't have. Let's see, did I put it in this one? No, it's in another one. You should check wave personality, and wave personality will answer that question, but it's not really aimed to, if wave 1 is long, people get in early. If wave 5 is long, people get in late. Wave personality is related to psychology. Of course, this is as well, but you'll see it. Just wave personality, Elliott Wave International. You'll get the explanation. And on a weekly time frame or higher, wave 5 tends to extend just because of the amount of participants in the markets that have increased over time during a big bull market. So over time, because it's been going up for so long, many people hear about it, many people join the herd, and then eventually you get that explosive 5 with people coming in at the end. So arguably your longer 5 FOMO, that's most people buy, arguably that it would be correct. A longer 1 means investors get in early. That's not something I've heard before, or would be something I would like put a stamp to it. I mean, possibly, but it's not like written in Elliott wave terminology or something. Yes, correct, Bear. Okay, and there we go. We're back to where we were. So cool. Oh yeah, low high. I explained this. I just explained the 886. So there you go. With the other question, Patrick, welcome. As an Englishman, I might say redo, or like you said, complete it again. Your English is basically perfect. Thank you, man. T. Clepson, yo, coming in with the compliment. I mean, I have an English-speaking wife. 18 years in the gaming industry also helps, but sometimes you sometimes will find me still looking for some words. But like everything, practice. Now it's time to improve my French. Do you know any trading jokes? Not really, to be honest. I don't know many jokes in general. ETH would be altcoin stream. What day is it today? Wednesday. I should do an altcoin stream tomorrow, actually. Would be something for the altcoin stream. I'll put it on the agenda for tomorrow. What do we have news tomorrow or not? Yes, only at 4 p.m. though. So we can do some alts before 4 p.m. Take a look at Bitcoin and then end it. So yeah, it could be interesting. Yo, David, what's up, man? I compared wave 2 to wave 1 in time, and I see bottom of 16th September at the end of it. Check in Discord so you know that. I'll make sure to check it out, David. I also saw your tag earlier with a nice Elliott wave count. You had a double 1-2. Maybe that's the one you mean here. I'm not sure. But you had a double 1-2 on the weekly time frame, which is definitely one I also keep an eye on. It's in my folders here. It's the weekly bull. But yeah, I would like a deeper retracement maybe. But it's a double 1-2 on the weekly is still on the cards. The just more passive, I suppose, conservative is looking for a 5. But you had some nice counts there. And this one I'll make sure to check. I'm not sure if this is what you mean, but I'll make sure to check it later, David. Yeah. I also liked it, by the way, that you put your name at the top. That's a good addition. Are the channels a legit tool in terms of Elliott waves? Yes. Channels are part of Elliott waves. I mean, by definition, if you go and look at how Elliott waves started back in the day, it was purely based on Fibonacci and the price action. However, if you read about Elliott waves and you go to Elliott Waves International and you check up on their content there as well, they also talk about channels. So it is something that is strongly related, I should suppose, I should say, I guess, to Elliott waves channeling in Elliott waves. Yes. Welcome. I joined. Koen took Monday off without permission. I prepared you. I was in Milan. You line up with Fiblas from the low to the high. That's exactly what I like to hear. Confluence. A 1 in 4, 25% of bull playing out is a chance to the market maker. Zoro Crypto, what's up? Thanks for me. I heard from your analysis, Mark Psychology, it's very likely. Yeah, possibly. Let's we want to see some good signs of strength for that to happen, but it's definitely something I'm keeping an eye on. Sometimes alts could show what Bitcoin might do. I guess, yeah, but there are so many alts. You got to analyze quite a bunch, of course, to get a good idea of, okay, alts have a higher probability for this, and then go back to Bitcoin to see if you can detect the same. But yeah, you can use other charts in Confluence with Bitcoin. But not just one alt, unless you go like ETH is also big. But you can't be like, oh, I got a new coin here, and like this is definitely like a 1-2, and then be like, oh, Bitcoin must be in a 1-2. You know what I mean? You do want a coin with history. You once showed your own book on stream, and we'll wait for that. Can't wait. Oh, yes, yeah. So actually, by the way. So I made a priority list. So I got my planner, right? I always have my planner with me, which is here. And I actually made a priority list. And in there, I also have the Elliott Wave PDF. Because Jeroen finished it. I need to check it. So I need time to check the list. Or the pages. And then check the rules, check the XYZ, and then eventually that would be finished. So of course it's not really a book, it's more like a PDF document with all the ways, and also including more tips and tricks, and certain ratings with stars for volume, and yeah, it's very complete. It's very nice. Koens and JPO. Don't think that's ever gonna happen. Did you start trading with dinosaur bones and shells and shit? Back in the day. When the charts were simply drawings in the mud. C-Bell, welcome. Good to have you here. Lots of typing. How do you manage a re-entry, like to determine a level where you want to enter an uptrend? Re-entry is a little bit twofold for me. So compounding would be different for me compared to re-entry. Re-entry for me would mean I entered, and for whatever reason I exited, maybe a TP or whatever, but you should have a plan and you should have stuck to your plan. And after like you hit TP, if a re-entry is a new setup according to your plan, then that is a re-entry. If you only re-enter because price continues in favor of the direction you were in, let's say long, and price continues going up but you TP'd fully because your plan said you TP, no re-entry. You want to stick to your plan, right? You need a plan, a strategy, something that's data driven. You can't snipe every low and get out at every high, but what you want is to get the percentages, right? You want to have like the I always talk about the sandwich, right? You want to have the middle of the sandwich, not the high, not the low. You want to have the middle, and that is where the profit is at the end of the month. So if you enter a position based on a plan, you TP based on your plan, and price continues after your TP, there is no re-entry unless a new setup shows. Then you re-enter, right? If there's no new setup showing, there is no re-entry, and you are going to miss out on the whole move, which is no problem, because you know that based on your plan and strategy, you executed a very nice trade. A re-entry after without a plan or strategy is simply gambling. That's not what we do. That's not what we're here for. We're here to make profit based on a plan, a strategy. It's like having a business, right? And at the end of the month, right, if you made your couple of percent, it doesn't matter if price continued or whatnot or what happened in that one single trade. It's about the consistency. And to protect the consistency, you don't want to take trades out of your plan. But if you can have a re-entry based on your plan, it's a trade. No? Yo, what's up, Mark? How you doing, man? Good to have you here. Good to have you. How's the house doing? How's the house doing? Yo, Sam. What's up? Welcome to Diamond. Yo, it's been coming. Welcome. Yo, fill in the form again, Sam. Or actually, wait, I can just look for your name. Yo, welcome to the team, man. Sam. Oh, there's many Sams. Sam. There we go. Put the Diamond. Let me immediately get this done. There we go. There we go. There we go. Sam. There we go. Sam Brandy. Boom. Uppa. Done. Yo, Sam, welcome, man. Welcome to the group. Welcome to Diamond. Building a plan, building a strat, right? Yo, great to have you. Sam, like, of course, like some people have been around for a longer time and are chatting, or I had email contact, or, on LinkedIn. We've been chatting on LinkedIn shortly. I know a little bit about Sam and his background. And, yo, great to see you joining Diamond, man. It's time to focus on creating a nice plan and strat, and you can check out some of the stuff I have there. But yo, welcome to the team. It's gonna be good. If you have any questions, let me know. I will write you an email. I might actually want to put that down. Same for Stephen. Yeah, I gotta write this down 1 second. Both Stephen and Sam, make sure you check the FAQ first, the frequently asked questions channel in Discord, because there's quite a lot of channels. So just so you know. Yeah, welcome, man. Oh boy. Yeah, come to Europe, man. It's a good place to be. If we have a macro WXY with the target 2930k, could be all wave 1. And consider a wave 2 and can correct from. I like so far I've not been a fan of counting the move from 15 to 73 as a single impulse. It's from a ratio perspective, wave 4 in any scenario is going to be shorter than wave 2 in time, which is not preferred as well. Wave 5 I think is the same length as 3-ish, but you know, okay. But yeah, it's if we go down that far, your bullish count of course is going to be an impulse, and your bearish count is going to be WXY or even an ABC if you go lower and then start a new impulse. So those will then be your two options. So it's going to be an option, yes. GB28, that would be a potential WXY with a zigzag in a wave Y. It would be very deep though for wave Y. That's the reason I don't really like it too much to go down that far. But if price can first move up to 68 and then go down, then let me have a look here. Where is the target for Y? There 46.9. 43 is still quite low, eh? Very low compared to the 1.618 target for Y. But in the end, like, of course, Fibonacci equals guideline, right? It's not like wave Y has to bounce in this target or stuff. But a WXY would be one of the scenarios. An ABC with an expanding structure in A is also still on the card, like a diagonal, big diagonal in A. But by all means, it would be nice to see a higher B in that case to like 67, 68 to get down there. Yeah. But it is an option to go down there. Looking forward for the channel video. Yeah, I'm gonna make it. Whose fib do I gotta pull to get a Kunz cap around here? Oh yeah, the hoodie should be at your neighbor now, no? It arrived, right? But you weren't home. Talking about the hoodie. Cheers, Relax, bro. Good to hear. Good to hear. Yeah, the chatting sessions, of course, like, so the people that come here for the core analysis, they can go to minute 19, just watch that and go out. But of course, questions, I think, are very relevant. And of course, sometimes in the chatting, chatting and Q&A section, we go to like, oh, where do you live, and holidays and restaurants, and oh, we have motorbikes, and we talk about games and whatnot. But of course, oftentimes good questions come in to explain stuff about Elliott waves as well. But yeah, cheers, man. It's good to hear. It's raining. Actually, it was raining in France today, and it's still cloudy, man. Gotta say, I do like it. I do like it when there's rain here. It smells fresh after all the heat. It's also nice for a run. So let's have a look. What's happening here? So the bullish CVDs, of course, also played out now. The bearish CVDs played out. This one on Coinbase did play out, but interestingly on the AGGR chart, which is a slightly different chart, we didn't take this low, but literally by like what? Like $1 or something. So what we now, of course, like to see, right? Remember, is we hit 57.2, invalidates wave 4. So therefore, the potential is there for impulsive continuation in a wave C to 60. And your alternative would be a 5, 3, and then another 5. Where is, did I put it in here? No. Oh, there we go. So we hit the 0.5 now as well. Of course, if we are looking for a 1, 2, and 3 continuation to move above this high and then a bigger flat, like here, A, B, move up, right? We want to see price action, first of all, not lose this low anymore. Reason is we now moved up on increasing volume, so your invalidation is going to be this low. Because you're looking for an impulse, so therefore you want to see 1, 2, maybe another 1, 2 or whatnot, but you want to see continuation. No? And preferably, if you move up, you continue building bullish CVD divergences. Right? You actually don't want to see price do this now and then do this and then start to create bearish CVDs, but not at all bullish CVDs. You know, like change local structure. Like that's not what you want to see. No, this like change structure and then have bear CVD, bear CVD, bear CVD. That would be a problem. No? That would go against the idea. But for now, we simply have a push up. So put this here up. I'll leave the volume. Okay, yeah, so this is compounding, Yannis. First of all, it's good that you enter with low leverage and low risk, and then you wait. So what you want to do here, this tip, is you have a certain plan, right? You execute on your plan. That's good. Low leverage, right? Making sure you have good risk management. And then what you want to do is know your signs of strength to add to an existing position. So if price moves in my favor and I see XYZ, I will add. If volume is increasing, if I see a higher high and a higher low with bullish CVD, if I see price flipping the VWAP or flipping a support resistance area, you know, like those type of things, so that you have a compound plan, not just price moving in favor, so I add, but actually price is moving in favor, step 1, but now I need to wait for levels to flip or bullish CVD or like other stuff, and that's gonna be the compound. But yeah, that can work, absolutely. This is, of course, by all means, never financial advice. It's stupid to trade based on other people's analysis. When will the Elliott book be published? This month, easy. I mean, I just need to check the. I need to check all the pages. Then probably we need to have some corrections, add a thing, remove a thing, make it look nice. Maybe write an introduction. But yeah, this month would be a nice goal to have. Invalidation is 56.1. Yep. So now we know 2 scenarios that we are looking for, right? The flat ABC with continuation and the finished 5-wave structure correction and a continuation down. Those are the 2 we keep an eye on. This was literally like a swing failure pattern on my chart. No? I don't know who asked it. Someone asked the other day, like, what's a swing failure pattern? Well, this is one. Yeah. Take the liquidity, close above, off you go. Will your book be available on Amazon? I still kind of have to think about where to put it. So for now, we've been working on design and the text. But yeah, how am I gonna put it out there so that people can download it, use it. Am I gonna like do stuff free or paid or middle or both? I don't know. Actually, that would be something to think about when we actually finish some of the designs. But Amazon, yeah, I guess like for people that just like with the CVD indicator, for people that just like to pay, I guess Amazon is a good place. A Kindle version, I actually don't know what a Kindle. So we're not talking about like a book. We're talking about like an Elliott Wave book, but then everything is in there. So the like and the physical book is on the plan, but that's 2.0. So we have a planning here, Jeroen and I, Jeroen employee, and we have Elliott Wave PDF. Sorry, you're getting tired. And then we have Elliott Wave book, which is that would be the step 2 of the PDF. And then a step 3 would be to also add a journal. So yeah, ebook, but better than PDF. Okay, I see. Okay. Would be interesting to look at those different things. I'm not too familiar with the Amazon marketplace besides just ordering stuff like books. But let me have a look. I gotta say, this move up is very fast. So what we are looking for, of course, if this is a low and we look for an impulse, of course we preferably want to see 1, 2, 3 sideways, 4 and 5, right? So arguably, instead of having an invalidation all the way at 56.1, 56.8 is already a weakness, unless we go for double 1, 2. But 1, 2, 3, 4, 5, that would be fine. Then retracement, double 1, 2 potential. Where are we now? Oh, we hit the point of control. Okay, so we hit the point of control of the range. Right, acting as resistance. Value area high, 58K. We did hit a little bit of support, at least here. We hit the value area low. Right, point of control all the way back up at 59.4. Value area high, by the way, 61.7. Interesting. But yeah, what I'd like to see is a move up supported by structure, CVD, flip some levels, all good. At least we have some volume coming in, moving off the value area low to the upside, but we want to see continuation. 57.2 has been hit, invalidating wave 4. Look for a flat or look for 535. Your middleman would be a WXYXZ, but that is always low probabilities. In that case, no, and then you look for a flat. No, that's not a scenario. Sorry, I just thought. But yeah. It's coming. Do you see any scenario which could break out, get bullish from 18th of September? 18th of September. In that case, you would probably need to go for the 1, 2, then create another like 1, 2. So in other words, 1 unfinished flat at the moment, but create a 2, then another 1, 2, and then you wanna break. But it's just wave 2 is very long. In a triangle, the 18th of September probably doesn't give you enough time. Yeah. Could you click with channels? Local price action. I mean, for an impulse, right? You can't actually pull a channel now because a wave 4 is invalidated here because of the 618. So if you are looking for this to be a 1 and then a 2 and a 3, continuation down, you need to wait for 2 to finish and then 3 to start. Only when you then take the low can you pull a base channel. Right? So if you're looking for an impulse. So of course you could pull a base channel here, right? And then yeah, price moved out of, we covered this on I think the live stream yesterday. And then you come back 4 and then you look for a 5. So 1, 2, 3, 4, 5, right? Pretty nice, pretty neat, no? As a 5-wave structure, hits the channel and goes down. It's just that the highest amount of volume is in 5, and 5 is the longest wave, which is not common for a 5, right? So that is what's important, and that's why the other scenario is A, B, C, where you actually move above this high. Now in both cases, this area is important, the 05 to the 786, and that is your area of interest for resistance. We now hit that area as well. So this would be your base channel. 1, 2, 3, 4, 5. Nice respect. That's what you like to see. Trend channel. 1, 3, and 2. Price moving to the downside. Breaking out. That's what you like to see in a wave 4, right? So you just wait for price to break the channel, and then you'll be like, okay, you know, we're looking for 4 if you're looking for an impulse. And then the end channel. Actually here. And 2, 4, 3. Sometimes you can also use 1. And then the lower half is the area of interest for a wave 5 to end. So from a channel perspective, right, you can count a finished 5-wave structure in here. Absolutely possible. That's also why it is one of these scenarios. Finish 5-wave, look for a 3-wave correction, and continue down. Right? Now in both cases, after touching 57.2, preferably you hit the 05786 area. We have hit the 05, right? Which is good to see. That's an area of resistance. And then we either look for continuation down or a move up. If we look for a move up, right? This currently, it feels very wave C-ish. It's very quick, very sharp. I want this, like, we didn't, like, yeah, we had bullish CVD here, but that was just one CVD. I would like, you know, give me something that you can play with, like, you know, structure, bull, and you know, then it gets interesting to look for the high. And of course, your bear scenario is simply what I have on the chart. So these are the two that you now want to think about, and then based on local reactions, local market structure, signs of weakness, signs of strength, you can change your position, change your plan, change your, you know, maybe enter, maybe exit. Like that depends on your own plan and your own strategy. But the two scenarios that we are looking for locally are very clear. But using new channels for like, oh, and of course you can also use a channel, by the way, if we look for an ABC. In that case, of course, channel from there to there to there. Right, so at the moment, there's the potential for A, B, C. And if you're looking for a wave 3, you want to see 1, 2, and you want 3 to break out. And then 4, come back, respect the channel, preferably finding respect in the upper half, and then you move up for your 5. But we want to significantly break the channel. If you maintain inside the boundaries of the channel, then you're going to be looking for ABCs instead. The target for the double zigzag is at 47k, but like you said, ABC target is at 44k. That's higher, so it doesn't need to hit 44k. Well, of course, you do like your sub-degree count ABC to match your higher degree count WXY, preferably, because a short wave C is simply not very common, right? That a wave C doesn't hit the common target area. So in that case, like if I had to compare a C against a Y, I would prefer a C to respect the target than the Y in that case, even though the Y is a higher time frame. But yeah, it's just for wave C's and zigzags. It's very rare to be a lot shorter than a wave A. So it would be nice to see a wave C hit the target. But of course, the target moves up towards the wave Y target if we would first move to 68. And before moving to 68, I would actually preferably hit 55 or 53. And then look for signs of strength, move up, 68, weakness, go down, mid-40s. So a big wick would be possible in that case. If you end with a wave C, yes. Right? Wave C's like to end on high volume. They can definitely be wicky. So yeah, that would be that would have potential. Yeah. Okay, everyone. Whew, 2 hours. 2 hours. There's Kun again saying I'll be here 1 hour. But you know what we're looking for. Be aware of the structure here. Is this bearish CVD? Little bit here of bearish CVDs. Of course, you want to see a continuation of bull CVDs and market structure up. This is the 1 minute, right? I preferably use 3 and 15. 3 minute just gives you a little bit more time, a little bit more info. But yeah, so your two options here locally, again, is a flat, 3-wave A, 3-wave B, 5-wave C, and 5-3-5. Now currently, price is contained inside the channel boundaries. That's a very bad channel I drew on the chart. So of course, if we are looking for a wave 3, we want to move out of the channel boundaries significantly. And preferably, I want to see structure with continuous support, bull CVD, flip levels, right? That's what I'm looking for. For the bears, you want to see literally the opposite. So for now, you had a high move on volume, little bit of CVDs on the 1 minute, but interesting to see what happens on a 3 and a 15. But this push so far, like it feels a bit C-ish, unless we can continue building bullish CVDs. I'm interested to look for the bigger move up. So the flashing R means that it's rendering, it's refreshing, it's collecting new data. So so currently, just FYI, I'm not in any longs. I haven't seen what I wanted to see. I'm interested, but I'm waiting. I'm just waiting. So I don't mind missing out, but I would like to observe the future ranges and retracements. So, and then I'm happy to join the party, if so. Okay. Jeez. Thanks everyone for being here. Appreciate all the questions and the chatting. ETH will be for something for tomorrow. Altcoin stream, and then 4 p.m. news would be fun. So we can do that. But thanks everyone. Flashing R explained. Line chart, open, close, correct. Make sure you trade safe, right? Always around news. Whenever there is news, tends to be volatility. And yeah, like price can do unexpected things. Now I get a question about silver. Let me just show you shortly. So in silver, throughout the day, sometimes more than other days, I just update about new counts, new ideas, new levels. I summarize every morning all the scenarios in text as well, with the probabilities. And depending on the day, like there's so much stuff in here. Yeah, I update stuff about channels, new ideas, but I always write what I mean and what I do. So yeah, and of course, if you maybe don't get something, just ask me a question somewhere in Discord, and I will be able to answer your question, which might help other members as well. But that rarely happens. Gotta say, it rarely happens. Someone asks me like a question about a silver update, but it's sometimes, you know, once in a blue moon, someone asks something, and then I answer it as a new update in silver. Okay, so yeah, trade safe locally, have a plan, have a strat, and tonight will be a new normal update. Tomorrow, of course, another live stream. I will make sure to put some streams in the agenda as well, so it's pre-planned, so you know what's coming. And yeah, thanks for watching, and I'm gonna see you at the next one.